Let's go to Hamilton. Here is Ed. Good evening.
Hi. I wanted to ask about CGI Group. It's been going down quite a bit the last while, and I was wondering if something's wrong with it or something happened, because I always felt it was a pretty good company.
Sure. So Ed, this is another technology stock that's been consolidating over the last 3 months. It's pulled back from about $55. It's just a snip below 50, so it's pulled back just a little over 10%. It's sitting just above the rising 150-day moving average. We like technology services. Technology as a group overall is one that we particularly like. We own some CGI. We own some other companies in the group. I don't think that there's a problem here. Remember, if you look at what's going on in the world, you've had a significant pullback in Europe. You've had a significant pullback in Asia. U.S. market's pulled back sort of 5%. Canadian market is worse than that. Relative to the market, CGI looks pretty darn good, and they've got a pretty predictable business model.
Are you in this one?
We have some CGI. Yeah.
Ed's in Vancouver. Good afternoon.
Good afternoon. Thanks for taking my call. I wonder if you could comment on Brookfield Renewable Energy. Is that something you consider investing in? And if so, is it a good entry point? It has been drifting down, particularly today. Is it something fundamental, or is it just get caught up in the market?
So we don't own a lot of infrastructure. We do own Brookfield, the parent company. We think it looks quite good. Brookfield Renewable basically has been trading sideways through the course of this year. The revenue side and the earnings side is a little bit spotty. I think that there might be better places for you to look.
Just looking at a headline here, maybe you can comment on this, but Greece is seeking $59 billion as part of a new bailout package, according to draft legislation. And so they're submitting this to their own parliament. They submitted it to their creditors. Do you have a quick comment on how you think this is going to get resolved, or if it gets resolved?
Well, look, they're up against the wall at this point. So this is their shot at saying this is the deal that we would do. And it's going to include asking for some more money, and it's going to include accepting some restructuring that they're going to need to do. I know very little about what's been proposed, but from what we saw coming into around 4 o'clock, which is when they had to put their plans forward, it looked a lot like a plan that was requested of them earlier on. So I think we're going to get some resolution one way or the other over the next few days. And either way, I think it's going to be good for markets to take some of the uncertainty out.
It looks like Tsipras, the Prime Minister, and his team has backed down a little bit, agreeing to sweeping sales tax hikes and cuts in state spending for pensions. This is something that the EU had asked for back in late June. All right, back to questions now. Ram is waiting in Calgary. Hi, Ram.
Hi. I'm looking at Terra Motors, TTM on New York. From bottom fishing point of view, it is selling at $31 and less than 10 PE. It has very strong trucking market as well as exports to other countries. From risk-reward point of view, would this be a good bet, or would you prefer some other company like General Motors or BMW?
Right.
Thank you very much for your thoughts, sir.
Well, Ram, there's probably much better people than me to ask this question, because one of the things we absolutely don't ever do at Barometer is try and pick bottoms. There are people who are good at valuing businesses, and they're very willing to hold securities for a long time until the market comes to agree with them, if the market agrees with them. I think that we're in a decent market. You want to own things that people care about right now. So if you want to own automotive, I would own Magna. I would own BMW. BMW is performing really well, and they've got some real wind in their sails. But for Tata, I think I would not be there right now. It's a bit of a broken stock.
Dennis is in Red Deer. He has a question here. Hi, Dennis.
Hi, thanks for taking my call, gentlemen.
Sure.
Want to talk about Potash Corp. A couple of questions. I've held it for quite a long time, and through a drip investment, and talking about the acquisition overseas and basically the drought in the West, and your opinion on how that might affect the stock. And I'll hang up with answers.
So let's take this from the top. From the top down, basic materials is a very tough space to be in right now. This is a group that has been under pressure because the pricing power has not been so good. In the grains, grain prices have been getting a little better recently, which is a good thing, but potash really not benefiting so much. If you want to be in this space, I would take a look at Agrium, because Agrium gives you a little bit more diversified footprint. It is performing a little bit better in the market. It's got nothing hanging over it. We own Agrium, and it almost looks diametrically opposed from a technical perspective. Again, we don't try and buy turnarounds. We don't try and buy groups that are out of favor, and that's got both going against it right now.
The retail component to Agrium, how appealing is that for you?
Well, it's appealing because it's a diversifier, you know, and certainly if you're in a commodity and the commodity price is weak and the pricing power is not there, you know, you don't know how long you're going to be waiting. And so I just think that potash is not the right neighborhood to be focusing on.
And there is Agrium, the big outperformer the last 5 years, with a double compared to potash. We have a bunch of questions waiting on the other side, and then beyond that we have top picks, so stick around for the rest of the show.